Hi, this is Joseph. In this video, I'm going to review some of the trades from Friday, April 22nd. All of these trades were executed within the FTMO and the My Forex Fund account. There is a third account, but most of you guys are focusing in on the FTMO and the My Forex Funds company. So we're just going to kind of leave it there. The trade copier does work with both of them. It actually works with all three. I have three different funded accounts that I personally execute. And then all of these trades can be copied with the trade copier. So if you want the trade copier, the link is in the description just below. It'll send you straight to a page. Right now I've got 50 subscriptions to this trade copier. You can buy it one-time fee for the year. I'm not going to make it available for too much longer. I do have it also available on another website, which is a monthly payment of $149, but you can get a special discount on it if you just use the link below. So this trade, what we're looking at is the euro dollar. Euro dollar 1 hour time frame. I'm going to give you a couple of ideas of how I trade so you could expect to give you an idea of what you could expect if you're going to use my trade copier on your FTMO or my Forex Fund account. So I am well aware of the parameters. I've got my own account for all three of them, but so I don't go beyond those the parameters. I've been doing this for a long time. So first of all, if you haven't watched any of my other previous videos, I've been trading since 2000. So I've been doing this full time since 2000, 22 years now. I do have a private fund that I started back in 2005. I continue to have those investors. And when I day trade, a lot of these trades, because of the use of the trade copier, will go into multiple accounts. So that's a good thing. That's why I've been using this trade copier for a long time. So I've got a lot of experience with it. We know it works. It works really well. If you check with your individual, the funded company that you're trying to get funded for or pass, just double check just to make sure that they haven't changed the rules. Nothing's changed up to this moment that I'm making this video, but they do allow the use of the trade copiers. So just make sure, if you want to ask the tech support or customer support, you can ask them just to verify it. I believe My Forex Fund, on their website, they do mention that they allow the use of trade copiers. So does the third company. But anyway, let's continue here. So let's show you what these trades are. Most of the trades are going to come out and I execute. You'll see them during the London and the New York session. But I want to bring to your attention that this is a setup that some of these setups actually developed at 8 o'clock. So I'm in California. For those of you who are outside of the United States, just to give you a base line so that you can understand the time frames that I'm talking about, I am Pacific time and I'm 3 hours behind New York time. So if you always keep focused on what time is it on the East Coast in New York, just figure 3 hours behind. That's where I'm at in California. So very often the London market will open at midnight California time. That's 3 a.m. approximately New York time. And then, from wherever you are, around the world, you can kind of calculate that. So most of the trades, because of how active the London market is, that's, I'll get some opportunities. I can't say that I always get an opportunity right at the London Open. Sometimes I get some trades before the London Open, like 2-3 hours. You've probably noticed that if you've been trading for a while. You get a little bit of activity sometimes, a few hours, maybe a couple hours, 2-3 hours even, before the London market open, and then you get a reversal. Sometimes you'll get that reversal. So that's what these time frames represent. So let me give you a walkthrough. This is Thursday. Here's Friday. This is Thursday. So this is Wednesday night going into Thursday, and then this is Thursday night going into Friday. That's what we're looking at. So this is 9 p.m. California time, 10 p.m., 11 p.m., and then here is the 12 o'clock bar. That's the London market open. That's the first 1 hour bar. Now, I'll go ahead and give you a pretty good idea of what you could expect. So, if you're going to be using a trade copier and somebody's going to be trying to help you get funded or pass your challenge or even continue to use, you could use my trade copier to get funded and to pass your challenge, and then you could use the trade copier when you get approved and you get a live account, or you can just simply use the trade copier on your current live account, whatever balance that is. But using a funded account, obviously you're using somebody else's money. I mean, where else, if you don't have $100,000 or $200,000, where else are you going to get that money, right? So it's a good idea to use the trade copier on your $200,000 account. You could potentially see anywhere from $15,000, $16,000 and up. I mean, some people have used a leverage that I wouldn't necessarily recommend, but some of them are actually seeing that use my trade copier, seeing about $35,000, $38,000 in profits on a monthly basis. It really depends on the market and the opportunities that it provides. Not every day am I going to make 300 or 330 pips. So let me walk you through Friday's trades right here. Again, this is a euro dollar. You can see what I'm doing here. You can see where it's coming from. This is a 1 hour chart. This goes back. The peak right here is March 31st. April 1st all the way down, and then here we are on the 22nd. So let me review this trade here. So you may be wondering, do you use any indicators? I see a lot of guys that, being in this business and then being a funded trader, I wasn't into that a few years ago. Like I knew about it, but I used to think that a lot of those companies were scam, and a lot of them actually turned out to be scam. And then I had a coaching client that mentioned it to me. He asked me if I would actually help him, and if I would trade his account to get qualified for his funded account, and I did. He paid me a share of the profits when he went live, so I had to trade it. With that particular company, I had to trade it for 2 months. The first month was a demo, second month was a live account. At the end of the second month, he was able to withdraw profits, and then he paid me. And I thought, wow, this is really cool, because I could offer this to a lot of people that would really help a lot of people out there that are trying to get funded. If you look at the results and the statistics, so many people try to get funded and people blow it up. Like I listen to these people. Again, I've been doing this for 22 years. I've studied. I'm not even going to go down that road about how much effort and how much time and everything that I put into it to learn how to become a trader, a profitable, consistent trader. But what I see and I hear, the people that make their YouTube videos on their journey of becoming a funded trader, I remember making those mistakes. Like I remember that in the first year of my trading career, and I know exactly what they're doing. I know exactly why they do it, and I know exactly what's going to happen. Again, not because I'm a genius. It's just that I've put in a lot of time. This is all I do. So I want you to know that when I trade, I really don't use indicators. Like I see people putting the Fibonacci tool, and I'm thinking, why are you putting it there? Like they're sort of guessing, and they're creating patterns that they think that they recognize, and they're not really valid, legitimate patterns anyway. And you find that out because these people end up making tweaks and changes to their system anyway. If you stay in the business long enough, you end up, hopefully, you figure out that you've got to study this. You got to learn how to trade. There's a very specific way to do that. It's just that when you get into this business, there's no one central point, one location, one first initial opening door that says, hey, this is exactly what you need to learn before you place your first trade. There isn't one place that will tell you that. You don't know that. You just watch a bunch of YouTube videos or join some Facebook groups, and you think you can learn how to trade for free. I'm not going to go down that road anyway, but what I want you to know is that I use basically accumulation distribution structures. I use point and figure for most of my targets. Point and figure is something that takes quite a bit to learn. I started using that many years ago. It turned around my trading. You can't use point and figure tonight and then try to use it tomorrow. But I know a lot of people will try it, and then they wonder why it doesn't work. You know what I mean? And they say, well, maybe I'm not being disciplined. No, it's just that you haven't learned enough yet, is usually what's the case. Yeah, in some cases you're not disciplined, but I see a lot of people who are trying very hard to be disciplined, but they just don't have a good trading system to begin with. Anyway, the trading system that I use is I'm primarily trading off of bar charts, and I'm reading the footprint of smart money. And I know a lot of people say that. It's a term that's loosely thrown out there all over the place. But you really can, if you know how to read the charts and you are dedicated to learning. And it's not something you're going to learn overnight on a few patterns. It's not. There are college courses that will teach you how to be, and there's also organizations that you can learn to get to become a certified chart technician. You go through their curriculum. You go through all of that. That material will take you a year to a year and a half to go through. And so many people think that they can learn how to trade on a couple of YouTube videos. It might be a pattern that you can recognize and might work every once in a while, but it'll eventually catch up to you. You got to be really careful. You really want to know. And I'm not saying that you can't learn how to trade for free. I'm just saying be careful. That's all I'm saying. It didn't work for me. So I have learned, and I've taken all of the courses, not every single course. Obviously, every year or every couple of years, there's going to be a new organization that will pop up, and they're trying to establish themselves, and they'll have a certification program as well. But the ones that really matter, I have gone through those, and I've gone through all, and I've studied all the material. When I go through a course, I always go back. So I'm always studying. After 22 years, I get angry if I can't sit down and ignore everyone and study. I always do my study time. I always do my read time, and I reread all of the books that I read years and years ago. And in my opinion, in order to keep my edge and in order to be better than I was before, and I only compare myself to myself before. I'm not. I hear some of these guys that go, "Oh, I'm probably one of the best scalpers out there, probably if not the best, one of the best. I'm the best." I mean, there's one knucklehead that says that all the time, and I'm thinking, you better be really careful. Like that's going to get you into trouble when you have that approach. You know damn well that you're up against some of the smartest, sharpest minds. That's what this business attracts. So you want to get somebody that really knows what they're doing. That's all I'm going to say about that. So what we're looking at here is my bar charts, 1 hour time frame. I look at the daily, I look at the weekly, I look at the monthly. I'm looking at the 4 hour chart. I'm looking at all of them. But there are obviously going to be certain days and certain time frames that are going to show a much better picture of what's going on. And that's where you have to go beyond sort of, some people get stuck on maybe a 5-minute chart or a 1-minute chart, and that's all they trade off of, and they look for these little patterns over and over again. And then when it starts to run into critical levels of support and resistance, they can't see it because they're not looking at the larger time frame. So I'm taking into consideration everything that's going on here. I'm also taking into consideration exactly what's going on with the economic picture, right? I'm looking at economic calendars, making sure that I'm aware when economic data is available. I know it can have an impact on my trades. I don't jump in the split second that the news is released because I can't guarantee that everybody's going to get the same fill. Some brokers will freeze the price. Some brokers won't fill your order, all kinds of stuff. And because we're all using different brokers, or that possibility, if you use my trade copier, I got to be very careful with it. But it doesn't matter because I don't need to jump in the split second that the news is released anyway. So you're going to see some opportunities where the market will react, like specifically with the dollar Canadian a couple weeks back with their interest rate. We also had some other economic data last week and the week before that created a couple of different opportunities. They're really good opportunities, but again, I just wait for the signal and wait for the setup. Constantly reading that constant battle between supply and demand. There is a way to read and detect supply and demand. And the only way, in my opinion, the only real accurate way, and I'm not saying that indicators don't work. They can work under certain conditions and certain patterns, especially if you use them at the right location. Just like the Fibonacci tool can work if you use it at the right time. Problem is, most people are using their indicators when it's inside a consolidation. They're not using their indicators, including the Fibonacci tools, at the right locations. I know that they're not because I did the same thing. That's exactly why it didn't work for me. And once I learned how to read a bar chart, just simply read a bar chart, this is an exercise that I go through all the time, just to give you a little clue as to some of the things that you could actually do. Learn how to read a bar chart. I mean, you can take a chart and you can, perhaps move it to a specific point in time and say to yourself, based on all the data that you see here, where do you think price is going to go on the next bar? What do you think is going to happen next? And it's an exercise that I've been doing for many, many, many years. I did it initially with one of my mentors, and it forces you to analyze the data that's within these bars. Now, obviously, this is just relative to this particular time frame, but it really does give you a good sense of where it's going. You'll also recognize that sometimes with some of the bars, you can't tell. You need more information. You can't always identify exactly what's going to happen on the very next bar based on the bar you're looking at. It just may not be giving you a signal. However, in some instances, they will give you a signal, and you can determine what's going to happen on the next bar. That is the key to learning this. It's a long-lost skill. It takes a lot of effort, and I believe that every successful, profitable trader should know how to read a bar chart without any indicators at all whatsoever, and then start to apply your indicators and your chart, your Fibonacci tools and things like that. Enough of that sort of rant. I do a lot of coaching, so that's one of the reasons why I kind of go down that path and I start sharing a lot of insight. But it may not really matter. I mean, when it comes down to it, if you're going to use the trade copier, you just want to know that I know what the hell I'm doing. That's the bottom line, right? Do I know what I'm doing? Am I going to blow up a trading account? Can I stay within the parameters? And how much money do I make? How many profits, profitable trades, and what kind of pips could you expect every day? Because that's going to give you a pretty good idea of whether or not you should use the trade copier and what you could expect to your own personal account. So I earned 330 pips on Friday. I'm going to walk you through the first trade right here. This trade right here, you can see I got in at 1.0824. I had a couple of different targets here. The first target was going to be the 00, and then it dropped down here at the 80 level. In a situation like this where it's in a relatively tight range of consolidation, and that's relative to me and the time frame that I'm trading off of. If you look at this, it may look a little bit different for you because you may be doing different things and you may be looking for different things. But the way I see it, and I've been using psychological levels as targets since I started trading. One of the things I learned about psychological levels, again, a little bit of education here because I'm always doing it. I do private coaching. So psychological levels were something that I learned that traders a long time ago were using. They were using either highs and lows, yesterday's highs and lows, a high and low from an hour ago or after news, let's say last week's highs and lows, last month's highs and lows, last year high and lows. All of these different levels that are support and resistance. You want to remember these points. So I kind of use this analogy. If you and I were trading on the stock exchange floor in 1920, how are we going to keep track of these levels, right? So that you get my point. That's what we're looking at. So psychological levels were definitely something that traders were trading off of or around or expecting potential reversals. You may have heard this one, and it's called fade the double zero. That's an old school trading method. If you don't know, if you haven't heard about it, look into it. I used to use it with Forex. I don't use it all that often, but I see that it works within the patterns that I'm looking for anyway. So I'm reading the bars. I'm not just simply looking for the fade the double zero. Again, the double zero would be like, let's say the 1.1000 level, 1.2000 level. You get what I mean. So, or the 1.1800 level, something like that. You can Google it and look it up, and there's probably some explanation. I learned about that a long time ago. So psychological levels work really, really well. Here, again, I was able to trade it. This trade paid, I'm looking at my 27 pips. 27 pips on the euro dollar. Let me show you the pound dollar. And this is just on Friday. So here, this is a 30-minute chart. So I will use the 30-minute chart. I'll use the 1-hour chart. And then very often, I'll use the 5-minute chart. And one of the reasons why I'll use the 5-minute chart is if I get in an accelerated move like this, like very often I see people trade on their YouTube channels. And if they get into a trade like this, what they're doing is they'll go maybe up a time frame or two, and they'll start looking for another area of support where they would use as a possible target. And that very often will work. You can see I'm kind of doing that here. There are times when I do the same thing. I'm not going to explain exactly what I'm doing here. Anyway, story for another video. But in a situation like this, when you go to a 4-hour chart and you see the pound dollar dropping, then what are you going to use, right? I guess you can go to a monthly chart, and hopefully some people are actually doing that. You can see the monthly chart might help. The weekly chart might help. But in a situation like this where I'm using my 30-minute chart, I'm also, because I know I'm going to be day trading for the most part. We got to get in and out of these trades each day. You want to be able to make profits every day. So what I'm doing is I'm using a 5-minute chart. And I go to a 5-minute chart and I start reading these bars. There's going to be at some point a change in character. There's going to be a bar or a few bars or several bars that are going to create some kind of pattern or some obvious reversal. You can see how it starts to kind of unwind here. It starts to, there's the last, I call these ultra high range bars. What I'm talking about, again, I don't want to turn this into a coaching lesson, but you can see the length of some of these bars. They're very interesting, and they'll draw your attention to them. And you need to be paying attention to those bars. Something's happening. At this point, I also have another chart that has volume attached to it. Now, I'm not looking at tick volume on the MetaTrader. I'm actually looking at, if I'm trading the pound dollar, which is what we're looking at, I'm actually looking at pound futures, because I do have a separate account where I trade pound futures. And when I'm trading pound futures, it's like the most transparent way that you could see the amount of volume that's coming in and out of the market. I use the Thinkorswim if you want to do that. So I use the Thinkorswim platform. I execute my trades on that. So I'm looking at volume, and I can see volume printing this possible turnaround, this reversal, where it's actually going to stop. It's exhausting. It's not going to go any further, and that's it. The move's done. So in addition to trading it to psychological levels, which you can see here, let me tighten this up. Sorry, it's just out of view. The entry here, this is a 5-minute, but I was using the 30-minute as well. 1.2960. The target here at 20. 50 is one of the psychological levels. But 20, the double zero, 80, these are psychological levels. So let me share with you these psychological levels. Again, so the first one would be 50 on the way back down. Then the 20, then the double zero, then the 80, then the 50, then the 20, then the double zero again. And on the way back up, it's the opposite. So here you can see I'm trailing it, I'm following it, I'm watching, I'm reading these bars. I can see that these bars are not showing any sign of any potential reversal or stopping action. This is also the beginning of being able to read a chart so that you can determine your accumulation and distribution phases, or reaccumulation and redistribution. I don't hear anybody talking about that. That's a key. You better get out there and learn that if you're going to continue to trade. You may not need it. You might be lucky and get away with it with some of the patterns that you're trading. But if you want to keep going in this business, if you really want to learn it, you want to learn and study accumulation and distribution. Enough of that. So here is where I can find where it's, I can see based on these bars 5-minute chart, and I don't go any lower. I don't go to a 1 minute. And here is where I can see that it's starting to turn around, and then I close out the trade here at 80. This particular trade paid 78 pips. 78 pips from the entry. Now, I'm not double counting, by the way. Regardless of the number of lots that I put on the trade, I will report my statistics and my profits based on the entry to whatever the final target is. So keep that in mind as well. So let's go back to the 30-minute chart. The next trade I want to show you here is the pound yen. We used to call this the beast in the chat room many, many years ago. Some of my subscribers in the chat room. So this is the 1 hour time frame. You can see basically what I'm doing here. I'm kind of counting the waves. I go to a smaller time frame. I'm using, again, futures volume. I'm counting the waves. I can see the reversal. I can see it reversing here. I was using a 5-minute, a 30-minute, and the 1 hour chart because I was kind of going back and forth because the 30-minute looked like it was giving me a better picture of what was going on here until the 1 hour finally completed this pattern, closed below that support level. I got in at 166.81. Again, psychological levels. The first psychological level is 50. That's before that support low. You never know because sometimes they'll kind of drop and bounce and turn around and go back up. This is on a Friday, right? I don't want to hold any of the positions over the weekend. So the next level, if it takes out that 50, it's obviously going to be the 20, but I'm watching that bar and notice how strong that bar. There's a clear ease of movement to the downside and that bar closes right at the lows, expecting more follow through. So I can trade it right through the 20 psychological level to the 00. It blasts right through the 00 and closes at the lows, and then very little pullback, and then right there goes through the 80, and then here at the 50. Now, I did take a second trade, a very small trade later on in the day, and I was able to pick up another 30 pips on this one, but I'm only reporting it within the 330 pips that I made for the day on Friday. Now, I can't make 330 pips every day. There are some days I only make 40 pips, and that's for obvious reasons. The markets, for whatever reason, the Forex market might be in a really tight range of consolidation due to the anticipation of economic data, interest rate decisions, statements, whatever it is. And you've gone through that. If you've been trading long enough, you know exactly what I mean. So usually I could see, 40, 100 pips, 150 pips, 300 pips. This happens where I would earn 300 pips once, maybe twice, sometimes 3 times a month. But I can't guarantee that. Like during Christmas, right? During, let's say, holidays, things like that, it may not happen at all. It may just be 100, 120 pip days. That would be good. 100 pip days, 150 pip days, 200 pip days, those happen a little more frequently. There are going to be days, and you know this already if you've been trading for a while. The market's going to provide us opportunities like this where we're going to earn the bulk of our profits on days like this. And we need to be able to step up, recognize, and identify that there's going to be some activity. Other days, it's inside a consolidation, and it may affect most of the majors. So anyway, I'll leave it there. This was the pound yen. This pound yen trade paid 125 pips, and then I took that second trade. The next trade here was the Australian dollar. I did take 2 trades on this. The first one I reported. I did make a video right here, and you can see where I got in after the breakdown. This one, and you can see just how flat it was, and I waited until it actually cleared this level of support. My entry here was 0.7329. First target was 20, and I did take a second trade for an additional 30 pips here on this one. And that's not included in the 330. The next trade was the dollar Canadian. Dollar Canadian has been, I've been doing really well with the dollar Canadian, as you can see. This is a commodity currency. Very often it will react when there's something going on in that particular commodity that's tied to that. I won't get into the details, but you can see it's provided me some really good trading opportunities here. This goes back a few days ago. This was 79 pips. This one right here paid 74 pips. This was 79 pips right here to the upside. This was on Thursday. This is Friday's trade. So Friday's trade, I earned 74 pips. Again, from the entry to the final target. That's not double counting because of the number of lots that I have on the trade. So 330 pips on Friday. The previous day was just over 200 pips. Again, I can't do that every single day. It doesn't happen every single day because the markets don't move like this in every single day. For example, the dollar Canadian may get stuck in a range like this. So in that situation, I'm going to be very specific, very careful. I'm very calculating, very patient. I don't jump in the middle of consolidation. I refer to that as phase B. And you'll know exactly what I'm talking about if you study accumulation and distribution principles. Again, I'll leave it there. I'm not going to turn this into a coaching lesson, but 330 pips. If you want to get trades like this, you can use my trade copier. Again, I only have 50 trade copiers available. I'm making them available because I know that there's a lot of people. I watch it. I see it all over the internet, on Facebook, on YouTube. So many people are coming in trying to get funded. Look, if you don't have $25,000, if you don't have $200,000 in your trading account, then how do you really expect to make a significant amount of money? I mean, really, the only way you're going to do that is if you use someone else's money. If you're not ready and if you're just not prepared to trade, if you're gambling, I guess at this point, and you're still learning, but your dream and your goal, I mean, nobody should be able to keep that away from you, right? If you can find somebody who can help you trade a funded account, a $200,000 account or a $100,000 account or even a $50,000 funded account. If you don't have that kind of money, but you want the profits that an account that size can earn you, then you're going to have to get help. You're going to have to get somebody to help you do it. And the problem is there's so many people out there that claim they're really good traders and they don't know what the hell they're doing, or they're copying other people, or they got something to sell, right? I see it all over the place. So I'll just leave it there. I mean, I've been doing this. I've offered these trade copiers to my coaching clients since 2007. That's when I started coaching. So I've sold it in many different forms. I've sold it to people that join my coaching programs. I've sold it individually as a trade copier service by itself. So you can use it. You can use it for a full year, $99. I'm not going to make it. You're not going to be. I'm not going to make any more available after the 50 that I sell out. So again, if you'd like to see it, you can click the link in the description below. It'll take you straight to my purchase page. If you look around the website, you can see that there is another page where I offer to sell my trade copier service, and it's a monthly subscription of $149. But if you're watching my videos, or if you're in my email list, on my email list, I'm making it available to those people, because those people have been, they've stuck around for a long time. They've asked a lot of questions. They're, really trying to learn, but it can be pretty expensive to play this game. So again, use somebody else's money. Get yourself a funded account. Get yourself a $50,000 funded account. Get yourself a $100,000 funded account. And then you'll start seeing enough money that you can live off of. At that point, you can quit your job, right? I mean, this whole process will take however long based on the, the different company. Each one of these, they have different, they're similar as far as the programs that they offer, but they're somewhat different at the same time. So if you're ready, click the link. Get a trade copier, install it. There's a video that will teach you how to install it. It's very easy, very simple. We offer tech support if you need any help.